Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Rick Ackerman on the line, technical forecaster and author of Rick's Picks. He is an active trader. Rick, how you doing today?
Good, thanks, Joel and Brianna, for inviting me on.
All right. Well, just first, I just want to get your take on this topsy-turvy market. Big sell-offs, chopping through the 20, 40, 50, and 60 handles like there's nothing to it. You getting a little nervous about the market here long term, or was that just like a nice correction like we had in October to just buy up the market?
A little nervous. I'm thinking more Babson's break. If thinking back to 1929, August, when the market came down something like 3% on the bearish pronouncement of an economist who later became famous, Babson.
Mm-hmm. Okay. All right. So certain technical levels that you're looking at? Are you looking at, selling the strength here? Do you have any levels in the S&P futures or the broad market, or would you just prefer to wait till it takes out support and sell on weakness?
Well, I look to see how support targets hold on these corrective moves, and typically in a bull trend, the corrective patterns, I use an ABCD pattern, and the corrective patterns tend not to reach their targets. So in the case of the E-mini S&Ps, I'm looking at the 2003.75 as a crucial number. That would be full extension of the correction that we've had over the last few weeks. And if it holds, fine. But if not, I think that would be an indicator of trouble.
Okay, that's 60 handles away from here. So I haven't heard anybody talk about the lower 2000s as something to keep an eye on. You have been very bullish bonds, and boy, oh boy, you've been fighting an uphill battle here. Just give us your take on why you're bullish bonds and how you're playing it.
Well, it's been a rough couple of months for holders of bonds. We've come down actually pretty hard from late January. But I think we're turning around here, and I think bonds look good. You can see that every time they're disturbing headlines that investors flock to U.S. bonds, but also treasuries, German bonds, and even British paper. But there's so many ways that can there's so many things that can act bullishly on bonds that I see another big leg up, and my long-term forecast for the 30-year rate is 1.93%. So we've got a lot of room to move, and that implies huge capital gains for anybody who's long bonds in that kind of rally.
So you're not worried about the Fed messing up your scenario here, bumping up interest rates?
No, I've never really believed in the recovery, and I think that we've just had a warning, not a warning, but the IMF basically told the Federal Reserve, look, it would be better if you stayed loose. And I don't think the recovery has ever been so strong that the Fed could just kind of jump in there and start adding 25 basis points a month. Just to save face, they may do a one-time rate hike, but even that has potentially serious consequences.
So let's talk about the gold and silver market here. Boy, can't really catch a bid. Gold hanging out near the multi-year low, but you got a target on silver here. Do you want to talk about that?
Well, I've got two very nasty targets. I've been talking about 817 for COMEX gold, and the corresponding target in silver would be 10.820. I try not to get too far ahead of myself, and so there's a speculative aspect to that, but I think that if COMEX gold, for one, cracks 1125, we're currently $40 above that, there might be real trouble in gold. That is what I call the midpoint pivot of a big pattern that has a target down around 817, so a breach would be very serious, and silver has a corresponding midpoint support that is tied to a 10.820 target. So they're definitely on thin ice here.
Okay, now let's move on here to the dollar. What you take in the U.S. dollar?
I think there's a lot of room. When we talked last about this, I gave you a target somewhere up around 120. That's not a specific target. It would just be equal to highs made by the dollar index back in 2002. And I think there's a corresponding weakness ahead for the euro. The euro could fall all the way to long-term support down around 80 cents, and I think that's what's going to happen. A lot of this comes from my deflationist perspective, so that when I talk about a strong dollar, it relates to a global deflationary trend.
And how about the crude market here? You got any projections for crude?
Crude could come down a bit. I'm looking. I had a short out at 58.45. Right now, the stop would be $9 above that. Let's call it $68, and I think that crude's downtrend would max out around $30.25 basis. That would be the August contract. I don't think we're going to get there by August, obviously, but I think crude is definitely under stress, mainly because your biggest buyer at the margin, China, is slowing down.
Boy, that is you take some big moves out of the market there. I mean, the risk. I mean, that's good. So it takes a while. Do you trade around your positions at all, or you just kind of like now that the crude has been going your way a little bit? Do you lower your stop down to lock in profits, or you just stick with your original trades?
Well, typically we don't trade the big patterns because the implied stop losses are very large. But it's possible if you get an entry signal on a chart of larger degree, what you do is come down to perhaps even the 1 or 3 minute chart, and you find a corresponding downtrending pattern with its own entry level, and you essentially get into the trade on a chart of small degree with relatively small risk. You take some profits on a piece of the position, and then you let one run swinging for the fences. So it really doesn't have to be costly to play the big moves.
What about the euro here? I mean, they haven't talked a whole lot about Greece. We've been focusing on China the last few days and the computer glitch at the New York Stock Exchange yesterday. But what do you think? You think this whole thing with Greece is going to sink the euro?
Well, in my greedy way, I'd love to get off a short in the euro and actually a short in U.S. markets with some sort of rally in Greece's fortunes, and we know that the some sort of bailout is still under discussion, even though Greece has roundly rejected austerity in its own referendum. But Europe still wants to lend, and Greece still wants to borrow, probably more than ever since they've been lining up at ATMs for the last couple of weeks. So I really think there's going to be a deal, and the market's going to exhale. We'll see a pretty good rally, and that, I think, is a great rally to get short.
Okay. All right. Moving on here. You also trade copper. And what you look on the copper market?
Well, I'm always willing to see a rally in copper is suggesting maybe there's going to be a global economic turnaround, but in this weak recovery, which is mainly asset and real estate inflation, copper really doesn't have much to say. Recently, this week actually, took out a target at $2.45 a pound. That's basis September COMEX copper, and it looks to me like there's no bottom.
No bottom in the copper market. Okay, let's move on to stocks here. Apple's been under pressure the last few sessions. What's your outlook for Apple?
Well, I love the Apple story, but most recently they haven't exactly been hitting home runs. The wristwatch is really not breaking new ground, and I've even seen a pretty good case that maybe Apple should give up on the Mac, that it should focus on the products of the future rather than the laptops of the past. And if it wants to be the best in the world at a few things, it should concentrate on the next big thing rather than the last. And you can see that their entry in streaming music is not exactly revolutionary. It doesn't even much improve on things that Spotify, for one, is already offering. So I think that's why Apple has been struggling. It's still a great company, but they're not really providing the spectacular leadership that they have in the past. I've had a 145 target on Apple for quite a while, currently trading 124, but the stock just doesn't seem to be able to make headway. Still in a consolidation, and that target will still be good as long as the stock holds above, let's call it 122.
How about Google?
Google is a company you can never sell short. They've got their fingers in so many pies that you really don't know what they're going to come up with. And of course, they've got so much cash that they could go headlong into something like automatic, driverless cars and lose a ton of money and still not even flinch. So, but Google has also been in kind of a holding pattern like Apple. It has stalled on the way to my targets currently, stock at 522. It's got a shot at 680, but it's going to have to get past that midpoint pivot at 584 first.
Okay, let's move in. Some stocks that are on the radar today, and Goldman Sachs downgrade Shake Shack here. Any reason to try and fade this downgrade?
Well, I don't know if you've had the hamburgers at Five Guys for one, but there's a lot of competition in that segment. I looked at the long-term charts, and it's hard to find a bottom. Currently trading around 52. On the shorter-term charts, I'd say we're coming down to a minimum 49.39, and if it cracks that by more than a dime, you're going to see 47.39. And either one of those hidden pivots, what I call them, could create a pretty good bottom. But if they're taken out, then I'd be looking for lower.
Okay, all right. Move on here. Goldman Sachs upgraded Panera Bread. What's your take on PNRA?
What is the Panera symbol?
PNRA, Panera Bread. Kind of in no man's land here. Had a gap up. I believe that might have been from earnings. Kind of slow drift back. Papa, Nancy, Robert, Alpha.
I don't see much going on. The stock, as we speak, is trading exactly where it was back in early 2013. It's really been in a holding pattern, fluctuating from just below 200 to a low a little bit above 140. So just from a purely technical standpoint, there's nothing special happening on the weekly chart.
Okay, all right. Moving on here. Alcoa. That stock's been in a world of hurt lately. Trading up, what's trading up here in the pre-market? Any reason investors should take a look at Alcoa?
You know what? It's been so long since I've looked. I'm
Okay.
facing the symbol. The symbol.
AA, Alcoa. AA, Apple.
Um, Stock is in a pretty good downtrend here. The chart is really weird. It made a big bull market high in 2011 and came down, flattened out for a couple of years there, and launched again, but without getting past the previous high. So it's, I guess, very much constrained by global competition. I'm looking, I'll give you a target in the stock of $9.28, although we've had a bounce from an interesting place. $10.39 was what I call that's a 79-cent, what I call P2 pivot, and that could conceivably be a bottom. But if we crack 1039, the stock is going, I'm going to guarantee you 9.28.
Okay, all right. Guarantees here. Walgreens Boots Alliance, good earnings today. We had it trading up in the pre-market. WBA, Walgreens. Is that a stock you're taking a look at?
If the stock can hold above the May low at 82.53, I think 92.74 is possible. That's a key resistance, but it would be my initial target on any decisive move over the next couple of weeks. And I think that if the stock continues its amazing trend, you could see as high as 103 this year.
Okay, and another company, good earnings today, Pepsi-Cola, PEP.
Well, Pepsi-Cola is a little bit more spread out than Coke. You know, Coke has been having its problems because we're all swearing off sugar, and the monthly chart looks to be consolidating above a very long-term 91.18 target. It took 13 years to get to that target, and the fact that Pepsi pushed right past it suggests that the move above that price really is consolidation. So the stock looks pretty good to me, notwithstanding the problems of its larger competitor.
Okay. All right. Moving on here. One more for you. Mobileye. MBLY. I believe that was
Collision warning systems, and the weekly chart recently went impulsively bullish, meaning it had a very decisive rally that exceeded a key peak. In this case, the October price peak at 52.80, and that all happened in the month of June. It looks to me like more consolidation is needed. The stock has had a pretty steep move up, but it's just going gangbusters. 56.80 is critical resistance in any case, and if we were to see a decisive push past that number without any kind of pullback over the next few weeks, I think the stock could get to 59.54 or max out intermediate term at around 62.68.
Okay. All right. We've been on the line with Rick Ackerman. He's a technical forecaster and the author of Rick's Picks, covering a lot of stocks and commodities here. Rick, thanks for coming on. We'll speak to you again soon.
Thank you, Joel.